Welcome to GPAG 2021. We are back to our regular June schedule, but still virtual. Like you, we miss the in-person engagement, discussion, dialogue, and debate, and a trip to Napa, of course. We are thrilled you are joining us again, and welcome to our new participants. The more voices, the better. We hope you will enjoy the sessions available over the next few weeks and join us for Q&A in the grand finale, even if we're not together in person. We are fortunate to have the same very talented team who you know well working on this year's program again. And of course, Ashish is in a new role. He has joined the Treasury Management Organization with responsibility for large corporate relationships. Quite an exciting task, I have to say. It feels like everything in financial services and beyond has accelerated while we worked from home. All this sitting paid off in the new digital products and services. Home shopping and delivery to supply chains and payments have grown, energizing digitization over the last 24 months. Governments have leveraged banks for economic stimulus, which has required us to rebuild and revisit our client solutions from mid-caps to consumers. And of course, the financial markets boomed has resulted in accelerating product development as well. We all proved that you can run a global banking system from home, although I'm not quite sure of all the eventual outcomes, except that many of us would like to return to the office, and some of us are happy at home but would like to travel. BCP is BAU from home. Please participate in the sessions through the Q&A. Send us commentary any way you can. This is a vibrant community and more important to all of us now than ever. So without further ado, I'd like to introduce John Weiss. John is the CEO of the Corporate Investment Bank at Wells Fargo, in which we operate. John has been at the bank for a number of years, and last year assumed responsibility for CIB as the bank was reorganized under Charlie Scharf's leadership. John has been in corporate investment banking for a while here and at banks, including JPM. He led for many years Wells Fargo's wealth management business before assuming the role of CEO for CIB last year. Thank you, John, for being with us.
George and Ashish, thank you. It's my pleasure to welcome each of you to the 2021 Global Payments Advisory Group Annual Conference. We're excited to have you join us, if only in this virtual format, and we're thrilled to get you in front of and to introduce you to some of our talented Wells Fargo colleagues who are contributing to this conference and to many representatives of global institutions, including your own institutions. Since the last Global Payments Advisory Group met, I've assumed leadership of Wells Fargo's Corporate and Investment Banking Group, which includes the international division led by John Langley, who's based in London, and several material businesses that are active around the world in markets, investment banking, relationship management, and treasury products. Each of your institutions represents an important relationship to Wells Fargo, and we appreciate your partnership and your business. We're still living in this not quite new normal environment, which is virtual, but it does feel like we're getting closer to a return to office environment and to in-person meetings, which I know will be welcomed by all of us. Our industry continues to face many challenges against the backdrop of an ever-evolving regulatory and fintech landscape. As payments leaders, if we continue to collaborate, to innovate, and to share best practices, I'm sure we will be successful together at exceeding our customer expectations. Payments is an important business to Wells Fargo's consumer and small business customers and to our corporate and institutional clients. We're committed to investing in the capabilities that help us serve them and you. Within Wells Fargo right now, we are undergoing a transformation to create a more simplified and efficient company by focusing on our core strengths and our clients. Technology, efficiency, and client experience are foremost in our minds. Our focus is to create a strong, stable, and simplified global platform that delivers the Wells Fargo value proposition to our clients everywhere. We remain committed to serving our global clients. Over the last 36 months, and despite the pandemic, we've hired executives who have previously led global treasury services, operating services, innovation, and digital strategies at many of our competitors. I believe you will meet some of them throughout this program. We continue to make significant investments in our payments infrastructure. We also continue to work closely with SWIFT, and we believe that SWIFT GPI makes us more efficient and helps us provide the best possible service to our clients. I know we'll talk about this more on several of the panels. Thank you again for joining us for what I know will be some great dialogue and collaboration. I hope you'll get a lot out of this conference. And thank you to all of the leaders and executives who have joined the panels from industry, clients, and market infrastructures. With that, I'm going to hand it back to George and Ashish, and thank you again for joining us.
Thank you, George and John. This is our 12th annual conference. Some in the room have been associated or have joined this conference since inception. A special thanks to you. For those who are new, let me briefly highlight how GPAG was drafted and evolved over the years. GPAG is a thought leadership group hosted by Wells Fargo for business leaders of financial institutions. Starting this year, we are also adding some of our large corporate clients based in the US to this advisory group. A special welcome to them as well. Our objective is to conduct industry dialogue and share strategic insight on payments and the overall banking sector. 15 years back, we started as a small group, and now we have expanded to participation from more than 475 financial institutions engaged through various formats. Our topics have evolved based on the industry challenges, but our mission has remained the same. That is to share knowledge and best practice on topic of common interest. In addition to the annual conference, we hold periodic webinars and regional events for the group members. Our hope is that we can get back to meeting physically whenever it is safe to do so. A bit about the program this year. This year, our conference brings together thought leaders on innovation, digital operations, product, and technology to discuss current and emerging industry topics. Due to health concerns from COVID-19 pandemic, we again decided this year to shift to a virtual format. Instead of full-day conference sessions, virtual GPAG 2021 will consist of 5 90-minute sessions. In order to accommodate multiple time zones, the conference will offer the sessions in convenient time zones for participants in the Americas, EMEA, and APAC regions. We've organized our days around various themes. In addition to you as members, please feel free to extend invitations to others in your institutions based on their interest in particular topics. Today, on day one, George leads a panel to set the overall platform for our discussion. We focus on key platform transformation on day two. That panel will discuss core goals from a product, operations, and technology perspective and how market demands influence transformation. On day three, we discuss the changing role of banks in the new digital economy with a panel of experts. We bring back our breakout group format on day 4. We'll be presented with results of 2 groups who have met to discuss and assess both hybrid and transformational solutions that have begun to emerge in the industry. On day 5, we'll focus on innovation demands, evolving risk models, and community solutions. For days 1 through 4, we will hold live Q&A sessions after our panel discussions. Please feel free to send us questions at any stage or submit them during the live session. You can submit your questions by sending us email to GPAG mailbox. Our production partner for this virtual program, again, is Metro Connections. They host a conference web page that provides our agenda, links to daily sessions, speaker bios, and other useful information. It has been our tradition to visit Napa Valley during the physical event. This year, on the last day of our conference, instead, we're bringing you Broadway from the comfort of your home. Professional performers will sing a mix of songs from Hamilton, Wicked, and other shows they performed on Broadway. We look forward to the next 5 days of dialogue in small bites of 90 minutes. The success of this program depends on your feedback and interaction. George will now kick off the conference with his panel discussion. Thank you very much for your participation. We look forward to a week of exciting and engaging dialogue.
Good morning, afternoon, and evening, and thank you for joining us at the Global Payment Services 2021 GPAG Plenary Panel. Here we are almost 2 years into the pandemic with most of us sitting home, juggling work, relationships, children, family, homework, and schooling. Who would have thought when we were practicing BCP drills that eventually a bank like Wells Fargo with over 250 employees, 50,000 employees, and 60 million clients would be doing most of the service and support from home, like all of you. Or that the banking system would be leveraged to distribute aid to families and businesses alike, trillions of dollars in the United States and more around the world. We hope you and your family and communities are well and beginning to bounce back. Our hearts go out to those still struggling, including foremost countries such as India. As a plenary panel, we're going to catch up with some of the themes we explored in the past, update our outlook on emerging and material developments across the industry, including competitors, technology, regulation, and geopolitics, to name a few. We've broken the discussion into 5 themes that I hope you will find relevant in your daily concerns at work. The first being the pandemic and payments, with the idea to explore the impact of the pandemic, the needs of customers and corporates, governments, and the impact on services and competitors. The second theme is innovation and digitization. If digitization has been accelerated with the pandemic, where has it led us? And what are we looking forward to in terms of innovation as priorities? Third, we'll walk gently through the topics of regulatory and geopolitics. Clearly critical to all of us, capital costs in large institutions, and a theme that will be picked up in other panels throughout the week. Next, we'll move on to security, privacy, and sovereignty. We think that this is a relevant topic given the rise of and conversations around CBDCs, DLTs, cybercrime, and emerging privacy laws globally, challenging all and everyone. And finally, we'll wrap up with some views on the challenges given the aforementioned of running the bank while you try to build the bank. We have some panelists here to help us ground the discussion and revisit the comments with new information, and 3 new panelists from Asia Pacific, Africa, and Americas. We have 1 returning panelist who you will have remembered from last year, David Watson, who is the Chief Strategy Officer for SWIFT, with responsibility for market and competitive intelligence, strategic planning, thought leadership, and execution of key strategic initiatives for the company. And this year we have joining us from Asia Pacific, Shane Conway, who is the Executive for Transaction Banking and Enterprise Payments at NAB, and is joining us from Australia. Sorry, Shane, for the time zone. Shane is responsible for all payments at NAB Limited across all segments, for product management and change delivery for payments, trade, working capital, corporate, and institutional deposit categories. And he runs a team of 100 banking, trade, and working capital specialists who support NAB's corporate and institutional clients. Apologies again for the time zone. I know I said this earlier. We also, on the time zone challenge, have Lolan Moodley, who is the head of online channels at ABSA, and will be joining us for the first time. Lolan is currently the head of online channels within transaction banking at ABSA. He's responsible for combining client and colleague insights with emerging technologies and methodologies. And his team has a Pan-African mandate and covers digital distribution of products and client servicing, which we think is a very important geography and clearly fascinating to see what's going on there. And James Roush is joining us from Canada and is the Managing Director of Banks and Brokers Exchanges at RBC. He's also agreed to contribute, which should allow us to talk a little bit more about market infrastructures, among other things. He's also a member of the Investor and Treasury Services Operating Committee and has end-to-end responsibility for sales, service, and product delivery. So without further ado, I think we'll move over to our questions and our panelists. And I was going to start our session today with a question about really the pandemic in the world. And maybe I'll start with David. Just this kind of opening question I had, and I think a lot of people have, is if digitization was accelerating across small business consumers, corporates, and markets, has this gathered steam during the pandemic, and how?
It's a great question, George, and I think it's been a very different sort of financial crisis type situation we've been going through for the last 12 to 18 months. I think if we look back at 2007 and 2008, that was truly a financial crisis. I think what we see right now is a health and humanitarian crisis where financial services has had to lean in and step up. And I think what we've seen a real test of business continuity, a real push on completely different ways of working and servicing, which has actually accelerated, in my mind, a large change in our industry that's been brewing and in progress for a little bit of time. I think we've all read and seen the decrease in the use of cash in many markets. We've seen the complete disruption to the supply chain, particularly those parts that were heavily based on documentation and physical documents. We've also seen a complete acceleration in the ask for funds on account instantaneously, the pay now, sort of receive now in a virtual landscape. So when we talk about the change and the push around payments to a more digital world, what we have seen is a real acceleration of some of those threads, and even an acceleration in some of the dialogues of processes and regulations and legal positions that either directly or sometimes indirectly drive what we have there as a criteria for payments, and what either used to hold us back or actually going forward could accelerate us in spaces. So definitely seeing acceleration in many places, some faster than others. But to me, the real impressive nature of what's happened with financial services through this has been the actual continuity that the foundation and the backbone that it's continued to be while looking at those accelerations.
Thank you. I think I totally agree. And maybe Shane, David mentioned in his comments, supply chains, and clearly digitization, blockchain have been impacting supply chains. What's your sense, given your role, in terms of how supply chains have changed during the pandemic?
Yeah, thanks, George. And we have seen a significant impact on supply chains, driven by a number of factors. The obvious factor being the operational disruption to production facilities, but also surges in demand from online retail, as well as everyone focused domestically and was locked down at home. And those shortages and impacts have emerged in unusual areas. In Australia, for example, we had a shortage of bicycles for a period of 9 months. Never happened before. But overall, globally, what we've seen in the trade finance space is a couple of key things. A much stronger push to digitize documents and processes. So in that regard, the pandemic has been an excellent catalyst to advance that agenda. It's a long-standing agenda in trade finance globally, and I think we have reached a tipping point there. And we're seeing lots of fintechs emerge in that space who are trying to solve that end-to-end digitization problem. There's also another impact on some of our trading partners and trade businesses, which relates to geopolitical tensions with countries implementing tariffs and other measures on certain goods, which has caused some of our clients to have to reform their business and find new markets to trade with, and that's causing some disruption to our clients. But overall, I would say the impact on payments is threefold. We've seen a much stronger level of activity in domestic payments volume versus cross-border volume, probably reflecting the nature of our economy, which is very tourist orientated, particularly Australians travelling abroad. So quite strong domestic volume in payments versus cross-border. We've seen as a result of that, we're bringing a lot more of the trade operations and payment operations back onshore as well, due to the disruption in offshore processing centres. And probably a second order impact, which probably doesn't get a lot of focus, is as a result of our clients moving to new markets, is there's new imposts on transaction monitoring and screening activity, and really understanding what those trade patterns are.
Yeah, thank you. I think that it's particularly timely, this conversation today, because the New York Times has just written an article on the just-in-time function of supply chains and how this is starting to fail the United States. In fact, that there are no tennis shoes today in the stores or things like that. Return from the pandemic. But changing directions, thank you again. And then moving a little bit more towards picking up on your comments about digitization and innovation. David and I have talked about this in the past, but David, when you look at it from your perspective in your seat, what do you think about the importance of data in the digital strategy? Because it was highlighted in Shane's comments.
Yeah, it's such an important question that's again become even more prevalent in the last 18 months. And as we go towards sort of November 2022, should I say, as I like to call it, November 2022 for 2022, we're actually seeing even bigger pressure and desire for richer data and having the ability to move flows that traditionally used to happen by cash or by paper documentation in the supply chain or complex remittance processes and across jurisdictions, all requiring a substantial amount of data to not just flow with the transaction, but actually facilitate what's happening pre and post that transaction. Has really seen a bigger push around something that the industry itself has known it needs to do for some time, which is have immutable, better quality, richer data. And I think what we see is actually the work that we've put in for many years now to get us to where we are heading in terms of having richer, better quality data has become even more important because of where we stand with the bigger push and more accelerated push to digitization, the innovation that's coming off the back of that is then going to be able to build on those larger data pools and the ability to tell who touched what data, where, why, and when further down the chain and in a simultaneous real-time manner as well, really means that I do see new and different products and services on the horizon. And I think what we'll see is we'll see that driven in the consumer space, we'll see it driven in the SME and B2B space, we'll see it driven by financial institutions themselves, all looking at what can I do with this richer data flow I have end to end. Now that I can see that simultaneously in real time, what can I do with that? And I think it's really going to see a change in the way we look at things like liquidity management, collateral management, financing of trade in general. And I think really that's a long-term thing that has been in the works for a while, but the acceleration that comes with this digital acceleration, I think is going to make it very interesting.
Mm. And Shane and I were talking a little bit a week or so ago about the idea of banking as a service. We're seeing increasingly a demand in large corporations. I'm just wondering, Shane, picking up on what David said about data, what's your sense of this this push from corporations to seek out banking as a service?
Yeah, thanks, George, for the question. I think it's a really interesting area that's emerging quite quickly and certainly has a lot of interest from our clients in the non-bank financial institutions segment. I think it's important, though, to recognise the context that banks have traditionally offered banking as a service in various forms, whether it be white label credit cards or agency banking. So I think the industry has a long history of providing services to third parties. I think what's different this time is the level of digitisation in the economy, the ability of banks to connect with their clients via APIs makes the proposition a whole lot more efficient and interesting, I think, relative to what we've done in the past. For me, there's two big threshold strategic questions that I think banks need to consider when they're working through their banking as a service strategy. The first one is the economics of the arrangement. Is it possible to generate the right returns to justify the investment in banking as a service as a platform? And naturally that will suit new emerging fintechs who are digitally native and have set their business up that way, but traditional banks will require quite a lot of investment to offer that as a service. I think, secondly, for me, the big opportunity is in the payment space. So payments as a service, where banks can use their real-time payments engines, for example, to offer a wholesale payments proposition to fintechs that want to enhance their own customer experience. So in Australia, we're seeing lots of demand from non-bank financial institutions for payments as a service. And certainly our house view is that could be a large opportunity for the future.
Yeah, and I agree totally. And actually, I have a question I hadn't thought about before. Maybe it's a soft pitch, David, but as Shane points out, this banking as a service is a topic that we talked about briefly, but we both feel strongly about. What's the likelihood that, I mean, does it change the model for SWIFT at all if banks are doing this for the non-bank segment, or what's your perspective?
It certainly doesn't change the model. I mean, if you think about the foundations of what SWIFT is, it's a cooperative that's there to help the flow of information and the interoperability of the financial marketplace, and to have that interoperability cross-border, different product types, whether it's payments, securities, trade finance. So the idea that financial institutions are able to extend services to the NBFI segment, to other segments through banking as a service, is actually one that I see as a great example of both what SWIFT has done well in the past, but is a core part of our strategy just now, which is indeed, how can we be that interoperable, secure, safe foundation today, but also in tomorrow's real-time landscape, to help banks offer those innovative services to their end clients, and to not have to worry about the core piece that we are for the back-end international landscape, and really build out on that innovation at the front end, if you like.
Yeah. Yeah, I think it's interesting because definitely the clients look a lot different to what we've experienced in the past. And I hate to, I'm sure that we have a couple other panels that are going to talk about this, but I hate to leave innovation, digitization without talking just quickly about crypto and DLT, maybe throw in there CBDCs. So, well, I guess starting, Shane, maybe ask from your perspective, where does that fit in your strategy?
Yeah, thanks, George. And I do believe that crypto and the underlying distributed ledger technology that supports it is increasing in the mindset, strategic mindset of institutions globally. Certainly internally, we are talking more about it. I do think, though, it's a long game. So there are a lot of impediments that must be overcome before cryptocurrencies can be ubiquitous. The use cases, I think, are quite nuanced at this stage. So we see huge opportunities in particularly the institutional banking space, where we're talking about low volume but large value transactions. I think in terms of cryptocurrencies being a frequent or common unit of exchange for general commerce, I think we're a long way away from that. There are a number of impediments around regulation, KYC, for example, that would need to be overcome, as well as technical challenges with transaction speed. But I think overall, our house view is that it's likely to become ubiquitous in the future. It's a long game, and I think there's quite a lot of water to flow under the bridge from a regulations perspective.
Yeah. And David, just as obviously sending it over to you, because I know that we've talked about it too, about CBDCs and also where SWIFT is headed in this space. What's your level of enthusiasm?
Yeah, I think maybe level of enthusiasm is maybe the wrong word. To me, it's a question of if and when and how CBDCs become real, and they are in some places already. How does that interoperability work with the existing landscape, and to do so safely and securely? And that's where obviously we specialize our attention. And I think the understanding of how central bank digital currencies compare to commercial bank digital currencies, compare to stablecoin work, compare to cryptos that Shane was just talking about. I think all of those things and the interoperability between them, that, you know, where they're used for what and how they understand those implications of what I was talking about earlier in terms of collateral management, liquidity management, the difference between central bank money and commercial bank money. All of those things need to come to fruition. And certainly at Swift, we're very active in research, analysis, experimentation, you know, partnerships, keeping a very open mind and perspective, knowing that what our role is around that interoperability and how we're looking at the connectivity and drive of that data, the push to instant and frictionless transactions around the world. It's important to us to understand what role we should play and how we can help facilitate the industry without putting it at risk.
Yeah, it's certainly going to be an interesting movement forward, but it seems inevitable. It's just a question about how. So just shifting gears a little bit, I wanted to catch up on the topic of security, privacy, and sovereignty. This was a line that came out of something I recently read, but not only about security and privacy, but the likelihood that maybe stable coins or cryptocurrencies will challenge the sovereignty of nation states, and thus the central banks are so interested in the topic. But I would like to take it maybe more at a more granular level and ask you a little bit about how you see going really into cybercrime, because that's been certainly of quite big news here in the United States with some of the ransomware. What your views are today as we try to digitize more quickly? What's the risk that we just open ourselves up to further insurgents from outside, undesired insurgents? But maybe I'll start with you, Shane, and then I'll, David, pass it to you.
Thanks, George. I think the cyber crime landscape is shifting really quickly and certainly is changing the dialogue in the Asia Pacific region between industry, banks, and central bank regulators. And what I'm seeing is a lot more appetite for collaboration across those parts of the market. I'm seeing a lot more investment by large banks in particular into fighting cybercrime. And I don't think that trend will reverse. Equally, I take your point on digitisation, but in many ways, digitisation is it can be a strategy to protect assets as well, because you've got access to more data. And so what I see is banks investing a lot more in protecting the perimeter, so to speak, to create that fortress of protection around critical assets. And then on the other hand, I'm also seeing quite a lot of interaction with government on coordinating between large players in the market to protect payment assets in particular from the potential of cybercrime. So I think there's a long way to play out on this yet. I think it will emerge as one of the key risks in the next 5 to 10 years. And I do see greater intervention from government in this space.
Yeah. And I imagine, David, that this is so critical to what you do every day.
Yeah, I mean, you know, I think banking was founded on the idea that, you know, you can put something in the safe in a bank and keep it safe there. And many products were born of those funds sitting in the vaults. You know, our job remains the same today, which is to keep people's money safe as an industry. I think, you know, I think we've seen a lot of additional pushes to new and very different and creative technologies for new closed loop networks coming. And I think making sure that those networks themselves are safe and secure has been a key focus for those things. But I think what we've always had a view of is that, you know, open loop interoperability that I mentioned, and how do you keep not just your own network secure, but all the connections between all the other networks. And actually that idea of, you know, the weakest link is one player somewhere in the world on one particular connected to one particular thing. If that breaks, something can come in, and then it's all about fraud detection and different things. So when it comes to the cybersecurity angle, for me, it's yes about our own network here at Swift. It's about the network we have with the community, and it's also about the ins and outs of the community and the trying to make sure that we have the highest standards in all areas of the community, from the smallest players to the largest, from all the countries that are covered. And that's something that you has to be done in a variety of different ways, from different standards that you need to apply to allow people to engage, to the protocols you have on your network and on who engages with the network and how, and making sure that actually you don't look at cybersecurity as just keeping safe your own little piece of the pie or your own little bit of the process, but actually understanding the accountability we all have to make sure that it's secure everywhere.
Yeah. Well, I think that one thing that certainly has struck me is that the efforts that SWIFT made have really had quite an impact on a number of cyber situations we see occurring at financial institutions. Thank goodness, because it was getting out of hand. I do think, and we started pulling together not only our AML and financial crimes analysis, but we also do cyber analysis of financial institutions as well now. So I think that, you know, we have to really fold all that risk model together. But I think finally, I'd just like to move at one last, and I really, this was kind of where I was headed from the beginning with the, and you've answered the questions fantastically, but it is really the question of how do you run a bank and build a bank at the same time with all of this going on around us. And so, David, you just talk about being at SWIFT and you obviously work with banks. Well, Shane, the same question. This is really kind of a question for all. You know, given what we discussed about banks, how do you juggle running a bank and building a bank at the same time?
Yeah, it's a great question, and one that SWIFT is going through itself right now on behalf of the community as well, with our build out of our transaction management services, the bringing together of the orchestration of the future landscape rather than discrete data services supported by passive tracking that we have today. That evolution in itself for us and shift from messaging to transaction management is almost something that is accentuating this discussion for us, because we're running the network, we're running the backbone, where we need to keep it safe and secure. It needs to have its ongoing improvements. It needs to have its evolution. But at the same time, we're trying to step change, and we will step change. And I think that's something that's prevalent for us as the core, but it's something we see every bank at different stages of. And every bank, it's not something that it starts and finishes, it's something that's continual. Because that ongoing investment into the changing of the bank, the next evolution, the next stage, whether it's mandatory regulatory investment, whether it's product development, whether it's strategic steps it's making, is something you've got to balance at all times. And the answer is multiple fold, and it's specific to every situation. But for us, it's actually been that we need to keep very tight ownership across one environment through our chief product officer and what they are delivering, and how closely they work with myself and with those who face off to the market to ensure that we have a very tight view on what's happening when, the prioritization of that, but also that we have the right resourcing level between the two areas, and making sure that we don't ring fence those two areas completely, because those who are running the machine can sometimes have the best ideas around how we're developing the changing of the machine, and vice versa. So as much as you want to kind of keep them separate so that one doesn't disrupt the other, you actually kind of need them to work very closely together. And that's been very, very key for us, and how we're looking to deliver on this new next journey and next stage for the industry.
Exactly. And what's your thought, Shane? I mean, you've got to run a big operation where it's got heavy investment, heavy lifting in some parts, and you want to digitize other parts.
So, George, from our perspective, we start with strategic clarity and what markets, being really clear on what markets we're going to play in, how we're going to play in those markets, and when. So that's the first point. I think that running the bank and building the bank really does revolve around that strategic clarity. The second point is that we try not to see run and change as separate entity or separate teams. We need to think of our workforce holistically. The bank, most banks actually do have the necessary resources to do both really well, but they often suffer from what I call the trapped capacity problem, which is silo businesses operating separately means that you can't optimize the available capacity at a portfolio level, and that's a real challenge. So breaking down those silos and thinking of the workforce and resources holistically really helps do both, run and walk and chew gum at the same time. But I think also having a culture of continuous improvement is really important on the run side as well, so that you can bootstrap, as it were, the available capacity to set you up to then build and transform the bank. And finally, what I would say is that payments is definitely going through a renaissance at the moment, where I think banks are really starting to value the payments data and the information that it provides, and all the use cases that flow from that. For example, better credit underwriting processes, more insights that can be used to grow a client's business. And so I think with that recognition of value will come more investment and more resourcing across payments businesses in larger banks.
Yeah. Yeah, if only the markets would give us evaluations for our payment business, huh?
Correct.
Well, I wanted to start with the global payments and pandemic topic. Shane has already given us some background on his views of the impact on supply chains. But James, turning toward you, I'm very interested in what your general sense of the impact on banks has been from the pandemic, both at the relationship and banking level, but also how you see it from a transaction banking perspective.
Yeah, thanks very much, George. And I guess a number of things have been going on since the onset of the pandemic. We saw the very quick transition away from physical, people being physically in the offices, but also the physical ways that we interacted amongst businesses. So the impact of reduction of use of cash in society, of using checks, and the movement towards more digital payments and digital exchange of data. And that was perhaps most pronounced in the first few months of the pandemic, at least in Canada, where the government was trying to, I guess, reach support programs or get support programs into the hands of Canadians, and the banks were a big part of that. And it's interesting, even though we've been quite far along the digital journey, when you have to go totally digital, you start to realize the cracks in the system, perhaps of areas that weren't as digital as we once thought they were. So I think initially there was a lot of pressure around trying to use digital channels to reach our clients and interact with our clients at the same time as all of our staff were sort of displaced. Now that we're sort of a year and a half in, that is kind of, it's reached a stage where things are working quite well. It's established a balance. We're still living with I would call it the really inflation of balance sheets that we've seen over the past years, and all this buildup of deposits that are sitting on the bank's balance sheet. And so I think one of the things that's interesting for me to look at is how is that going to translate as it gets deployed into the real economy? And so that's one of the things that we're definitely going to be looking at as the economy starts to heat up, and it is already starting to heat up here in Canada. But all those funds in businesses and in consumers' hands, how is that going to be deployed? And then maybe I'll just end on one other thing that we've seen that's interesting here. A lot of, obviously there's been a lot of business disruption in the pandemic, some winners, some losers, but we've seen a lot of smaller businesses thrive. And again, that sort of identified some of the gaps that we have in payment systems here in Canada, just consumer to a small business, things like instant payments that were perhaps not as ubiquitous as they were before, but that's becoming more and more important now.
Mm-hmm. And before I move on, actually, you reminded me, James, of a topic that's dear to my heart, just simply because I think it's interesting, and you highlighted it, which was the banks turning into the channel for the provision of aid to consumers and small businesses. Do you think there's any lasting change that will come from that?
Well, yeah, like certainly the government's relied on the banks as the primary mechanism to even facilitate things like small business support programs and lending programs. And I would say in Canada, we have perhaps a less confrontational attitude between government and banks. So it is a little bit more collaborative. I think the government here does realize that banks, that they do need to partner with banks in important programs like this. And even though in Canada, we are modernizing our payment systems, and part of that is opening access to more players, there's still a recognition of the important role that banks do play in this country. And really the aid would not have been able to be distributed in nearly the same scope if it wasn't for the fact that we have, a small number of very large banks that cover the broad population.
Yeah. And Lolan, just a quick question: Did you have a similar experience in South Africa? The banks providing the aid and support to the population?
Yeah, absolutely. I think the trend was very much the same as what James has just described, where the government relied quite heavily on some of the larger commercial banks to provide that distribution network to actually pay out a lot of those aid programs. So I definitely think we resonate a lot with what James had mentioned.
Yeah. So now that I've got you on the line, Lolan, I wanted to follow up with another question, more specific to the clients, and really, if you have any insights that you could share with us in regard to how potentially client appetite has changed for digital services as a result of the pandemic.
Yeah, that's a great question, George. And I think thanks for having me join the discussion today. I think it's undeniable that the COVID-19 pandemic has created a major shift in demand for appetite for digital services. I think most banks will agree that digitalization was something that we've had on the radar for a long time now. However, national lockdowns and other implications of the pandemic has forced a somewhat unnatural evolution of client banking requirements. I read the other day that experts have estimated that the pandemic has actually expedited the trajectory of digital banking somewhere between 5 and 10 years. I think while no one would have predicted the impact of the pandemic, I'd actually say that banks responded better than expected. It's almost as if we as bankers needed to be injected with the crisis to start thinking about banking a little bit differently. That being said, I think we've only just taken the first step towards fully meeting client expectations. In terms of some of the segment-specific trends, I think we've seen the greatest increase in adoption in digital services in the retail market, absolutely. In South Africa, for example, this trend was particularly pronounced in the increased use of mobile as a means to perform banking. I think what will be key here and for banks to keep an eye out on is how we respond to the need for simple, more intuitive customer experiences as consumers continue to compare us to more digital native, I guess, service providers like Uber that they engage with in their daily lives rather than being compared to traditional financial service providers. I think in the wholesale segment, in South Africa particularly, it was largely a digitally enabled segment before the pandemic. What we've seen is clients are looking to banks to provide more solutions to help them optimize their back office processes and help them actually navigate the complexities that work from home policies, for example, have introduced in their business. Again, what I found quite interesting is that using mobile to supplement traditional online banking services, something that historically corporates weren't asking for, is now being asked for more and more. What I think is particularly interesting is that as we as banks look to respond to this increase in appetite for digital services, we must be aware and manage the paradox that it actually introduces. There's a lot of research that shows that as clients transition into digital banking and transition away from branches and more relationship-based experiences, overall customer satisfaction actually tends to decline. And I think this might be because mobile and online capabilities are often seen as commoditized services, and a move towards digital, I guess, feels like a loss in that personalized touch. And I think in South Africa particularly, while this might be more true for retail segments, I think it serves as a stark caution, I guess, for banks to be conscious and aware of these challenges as they look to digitally distribute their client experiences.
Thank you. Well, that sounds like a similar experience we've seen here in the U.S. and I think James probably in Canada, as you suggested.
Yeah, I was just I totally agree. I think as a bank that's historically, prided itself on the service, that really rich service that we provide to our clients, the digitalization of the experience does give us time, I guess, room to pause to try to determine how we can continue to provide that enhanced service as a differentiator when, as Lowell said, so much of the delivery can be viewed as a commodity service. So it's I think still evolving, but it's an important challenge that we're definitely conscious of.
Yeah, that's an interesting point. I guess, Lowell, you mentioned it as well, which is, I know that at Wells Fargo, one of the challenges was we have obviously a lot of consumers that still went to branches and a lot of small and business banking customers who went to branches. And the whole process of trying to get them to go digital was a learning process for us and for them. And how do you teach a client how to go digital when you really can't visit them and they can't visit you, right? And that changed the client relationship, I think, maybe for years to come. I'm not sure, though. Well, I want to move, before I move on, actually, I want to just touch on data for a minute, because that's kind of one of the things we've been talking about. And one question I had for you, Roland, and I think I asked the same just a few minutes ago of David, is how do you see data in the digital strategy today?
Thanks, George. I think to help contextualize my view, it's important to first understand, in my opinion, what digital strategy actually aims to deliver. In its simplest form, I think digital strategy focuses on leveraging technology to improve business performance. It's as simple as that. And typically done through new product delivery or process optimization. I think given some of the discussions we've already had today around digital transformation and the need to rapidly evolve our products to meet the changing needs of clients and the evolving landscape, I would actually say that data is the lifeblood of any digital strategy. If you look at digital natives like Microsoft, it always astonishes me to hear them speak about their ability to deploy something like 90,000 changes to their product in a day. What I think is even more astonishing was the findings from the research they did into the effectiveness of these changes. When they did this research, they found that 1/3 of the changes had a positive impact on the metric or outcome they were looking to achieve. 1/3 had no impact. And surprisingly, 1/3 actually negatively impacted what they were trying to do. I think as we move towards a world where products and services are going to be required to evolve much more rapidly, democratizing data will become the guardrails to help us focus and prioritize our efforts towards the largest opportunities for improvement. And then more importantly, serve as that critical feedback loop to actually tell us what's working and what's not. I think embedding a data culture that doesn't only help us understand the impact of our changes, but in my opinion, also is a key enabler for effective decision-making around product management. I'm sure many of us would have heard the famous quote from Jim Barksdale, the former CEO of Netscape, who was quoted saying, "If you have data, let's look at the data. If all you have is opinions, let's go with mine." And I think it's this ability to leverage empirical and objective insights into client behavior and trends that'll actually help us as banks deliver the level of personalization that we spoke about, that many digital strategies require to be successful.
Yeah, that's an interesting comment you made, because I think I just was reading a fascinating article, and I think this is attributed to a central bank, or I should know who they are, but they said data is more important than collateral. In other words, so with data, you don't even really need to know what the lender's quality is. You know it from the
Exactly.
And James, when you look at your business of banks and the rest, is data starting to surface as a conversation between you and your clients, or is it still probably buried deeper in the company's dialogue?
Yeah, I guess there's a few things going on. First of all, are sort of the macro trends that are happening just with the interconnectivity that we have as banks with SWIFT and the modernization and ISO 2022. So those things are going on, as well as in Canada as we modernize our payment systems, ensuring that data goes along with just payments themselves. So most definitely, and I think one of the things that we're finding interesting is, because our business is global, that different countries are at different sort of stages in their data journey. So your clients, as an example, may have different needs than a Canadian client or a UK client. So in some ways, we're trying to, I guess, accommodate all those different asks. But I think one of the things, again, that the pandemic has shown us and shown business is that in that data and the underlying payments, they can't be separated. Like there needs to be rich data that goes along with any sort of payment to facilitate the new way that many of these companies are having to work, because the previous way that they operated is disrupted.
Yeah, that we find that obviously the other element is what data is protected and what's not, and legislation differs so dramatically across the world. Yet we're trying to splice data for improved quality and improved service, but there's an endpoint to that, right? It's regulatory based or other. Yeah, it's going to be one of the challenges of digitalization, I suppose. Well, so I wanted to again shift gears and this time kind of pick up a little bit further into a topic which is always a little bit sensitive for all of us, but really is around the regulatory environment, and start with you again, James, and just what's your sense when you stand back and you look at your bank business? are banks feeling more comfortable about where their regulators are headed or less comfortable? What are the challenges you see in that space?
Yeah, in Canada, as I said earlier, we have a fairly, I think, collaborative working relationship with the regulator. So generally, I think we're working together collaboratively to improve just the overall environment in Canada. Now, I think there's still some areas like open banking and competition, and how do we allow non-banks or new entrants into our payment schemes to promote access, but also maintain safety and security. Those issues sometimes cause a little bit of tension between the banks and the regulators. But generally we're working, I think, fairly well in lockstep. But as you sort of pointed out in terms of digitization and data, I think it does become a little more complicated and a little tricky when we're crossing borders. And we have operations in Europe, a very different sort of animal around privacy and what you have to do in terms of working with your clients to ensure they're comfortable with where you house the data. A little different from the US and different from Canada as well. So I think that's where things get really complicated as primarily a Canadian and North American centric bank dealing with jurisdictions that perhaps have slightly different approaches to regulation, particularly around the areas of data, I think have been a little bit of a challenge for us.
Right. Yeah, I think that's, I see that every day with the large international presence we have, the continuing rules and roles and responsibilities issues, no matter where we go. What can you say in what country? Where can you fly? What can you do? What marketing material can you send?
Well,
it's more complicated, right?
and it's frustrating as well as, as a smaller country, if there's something unique that Canada wants as part of their AML regs, as an example, which is something else that we're in the midst of implementing some new AML regs here. If it's something different in Canada versus the other countries, that can sometimes be a difficult conversation with clients that are used to doing something that's perhaps not standard in the jurisdiction in which they operate.
Yeah. Challenge. So I'd like to shift the gears again to talk a little bit about running the bank and building the bank. So we've talked a lot about digitization. We've talked a lot about regulatory and the challenges in front of banks. But at the end of the day, you have to run a bank and you have to build a bank concurrently. And those, the cost obviously is enormous. The challenges are pretty substantive, doing both at the same time. And so I'd start with Lolan, or pick up with Lolan. Lolan, what's your take on how does a bank juggle, run the bank and build the bank?
Thanks, George. I think over the last 10 to 15 years, I think banks have focused most of their efforts on providing feature-rich products and services. And I think while this may have necessitated the need for ring-fenced teams who keep the lights on or run the bank versus those that predominantly build out new features, it made sense at the time. This has actually led to silos being created in how clients experience our products. And not only are these silos impacting our client experience, but it also, as you rightfully mentioned, results in a lot of back office and technology inefficiencies and additional costs and expenses in how we deliver to clients. For me, I think the biggest challenge that this has introduced, however, is that it's become increasingly more difficult to become innovative and to rapidly deliver new products and improved user experiences. I think digital banks need to be innovative and agile, not just in how they deliver products, but in also how we make business decisions. And I think part of the problem here, George, is that we've traditionally looked at run the bank and build the bank as having different strategies with different investment spend and different teams being accountable. I think given the massive focus on digital transformation and this need to be client-centric, I believe that many banks will look to evolve their strategies for delivering change. In my own opinion, I think more banks will start organizing around cross-functional business and organizing cross-functional and product teams around value streams rather than functional silos. And they look to adopt more of a DevOps model for technology delivery. In my opinion, I think this trajectory will be for a couple of reasons. I think adopting a DevOps model helps break down barriers and silos between teams, allowing banks to deliver change a lot faster and more frequently. organizing around value streams encourages teams to drive change and optimize user experiences across the entire value chain. It allows teams to take a holistic view of the entire ecosystem and improve not just the client experience, but also the employee experience. And I think thirdly, and to your point, most importantly, it allows banks to consolidate all potential investment opportunities into a single view, and then actually prioritize that based on economic value and impact to the overall client experience. I think as banks get better at leveraging modern technologies and get into a cadence of delivering and deploying smaller changes more frequently, that need for a separate run the bank and build the bank team will become less evident, in my opinion. I think this is how we need to evolve our banking products and our practices if we truly want to become more agile and more innovative in our delivery.
And so maybe James, from your perspective, and you can take this where you like, but I just thinking a little bit about your customer base. Is a lot of your customers you deal with directly are financial institutions. You've got to hear the same conversation going on at many of them. What's your takeaway? Is the bank's going to give in, or do they think that they can invest?
Well, I think we can invest, but I echo actually a lot of what Laurent said. I think the days of sort of run the bank, build the bank, that is sort of blurring, and we are moving, and we have moved away from this sort of larger big bang projects to more of a incremental improvement so that we can respond to client needs in a much faster, efficient way. So I have seen that change. And I think in many of the banks that I'm dealing with as well, they are becoming able to respond to things a lot quicker. And actually COVID in many ways, forced us into doing that, right? We had to make changes quickly in many of our systems just to get things done. And so I think the mindset did shift. It helped with that mindset shift. So we are getting better at responding to clients quicker, at kind of blurring the lines between run and change. I would say though, as an organization, we have seen some value. If you're looking at new things that are kind of really out there, we have found that there is benefit to separating that from your normal client running the operation, and we've had some success in just sort of carving out little spaces for people to sit and just sort of toy away at things, because I do think it's difficult to sometimes be thinking very far out in the future when you have a whole body of work that you're dealing with today. So it's a little bit of both, but we are better, I think, at doing that small incremental change faster. And I think many of the banks that I'm speaking to have been doing some better than others, doing that for a period of time as well.
Okay, I'd like to take the opportunity to thank this great panel. It's, first of all, a pleasure to have such talented bankers together in one place to talk about the businesses that excites us. I think that the perspectives that each of them brings has been useful to me, and hopefully to you, particularly since they not only come from banks that across the world, but also we have the perspective of a provider like SWIFT in the midst of it. One of my takeaways is that despite the challenges, there's a fair amount of optimism on two fronts. One, that we will bounce back from the pandemic and we will be better. And second, that there are digital solutions and banks will be competitive in this space to improve the life of our customers and clients around the world. So I'd like to thank James and David and Lolan and Shane for the effort to join often and out of time zone, and look forward to your questions for them in the coming sessions. Thank you.
Thank you to the panel. Great discussion. Let us now take a short break before we go to open dialogue and Q&A. As a reminder, please email your questions for the panelists to Global Payments Advisory Group at wellsfargo.com.
Super. So thank you very much to everybody for the conversation, the dialogue, the debate. There was no disagreement, I don't think, but anyway, I thought we would move on now to take some questions from the bankers, the transaction bankers, everyone who's been following us. And if we don't have many questions, we'll make them up. But we had one of the things I did want to do is kind of go back, because we do have a question about the pandemic and digitalization, and go back a little bit into the topic of, what the pandemic meant for financial institutions and what it meant at the level of digitization. And so the question we have from one of our listeners is, how does the digitalization, which has accelerated during the pandemic, impacted the branch network concept, and whether branches will continue to provide, core banking services in the future? And maybe Shane, I'll start with you if you'd like.
Yeah, thanks, George. And it's a great observation and often forgotten about in the trends that we've seen during the pandemic and the move to digitisation. Actually, one of the biggest impacts has been felt in the branch network, where over-the-counter transactions have declined significantly in the last 12 months, and at least our view is unlikely to return, as well as customers have embraced digital means to complete their banking activity. So I think that trend is irreversible. What you will see, though, I think the new trends that will emerge is banks getting creative with how they use their branch network. For sure, most banks will have a smaller network in the future than they do today. But you will see for those branches they do manage different use cases or different activities and different use of the human capital that exist in the branches to undertake activity that the bank does that used to get done in a central CBD office that will now get done in a more dispersed manner. So I think there will be quite big impacts on the branch network in what happens in the branch. And yeah, watch this space, because I think there's a lot of opportunity there, as much as there is focus on reducing costs and getting more efficient.
Yeah, saving on real estate, right?
Exactly.
So James, turning to you, as RBC's got a branch network and businesses across all of North America, pretty much. What do you get a sense of how that impacts RBC in your broader kind of North American space?
Yeah, as Shane said, there's no doubt that the role of the branch in terms of banking transactions has irreversibly changed throughout the pandemic, and that will continue to be there. So, there's I would say less people doing different things in the branch than they were, pre-pandemic. I will say one of the things that's maybe a little bit of a constraint for us is we're the largest bank in Canada, very large geographic reach and large employer, and there's a lot of sensitivity, and I think there's a responsibility to the communities in which we serve not to shut down all these branches. So I don't foresee, and our CEO has also echoed that we're going to see a drastic shrinking of the physical network, but the activities that are done in those branches is going to change. And a friend of mine actually just recently went into a new branch, not RBC, another Canadian bank, just opened in his neighborhood, and he went in to withdraw cash, and they said, "Oh, we don't give out cash here. Go to the ATM." So again, I think what's going to happen, they're going to be more advice centers and places where the community can come and learn and do different types of transactions.
Yeah, it's interesting, because we obviously, like you, we have quite a substantial branch network, like both of you, and the branch managers and branch team was really pressed into other obligations, training. Sometimes it was the elderly that needed to know how to use an iPhone, or it was a small business, with, less than $1 million in sales that needed to kind of get up on our banking network. And I think that there was a revelation that the branch network had another source of opportunity in terms of engagement with the clients. I'm not sure whether that's the same for both of you, but that certainly was something that came to the forefront for us in our branch network.
Yeah, and I'll just add, I think I mentioned in the panel that the role of banks and the role of the branches in the communities at the onset of the pandemic, where we played a critical role in getting aid out to our clients, to Canadians, and also helping them engage with government to access government support programs. I think was very, very important. And again, I think it emphasizes the importance of banks and those physical structures within the communities in terms of supporting the clients that we serve.
Yeah. Yeah. We were just talking about that, Shane, right?
Yeah, and I think the point that James was alluding to there is what we saw during the pandemic was a real reevaluation and valuing of skills, financial literacy skills that bank employees have that may have been forgotten about or at least de-emphasized over a period of time. You know, in a crisis, you really need people who know what they're doing, and as it turns out, most people working at banks do know what they're doing and really kept the economy going, kept payments flowing through the economy, provided access to credit in you know, a really difficult situation, but really efficiently. And that's certainly been valued by governments in our region and in the community as well, which is a bit of a reversal of reputational trends for banks, at least in the Asia Pac region.
Yeah, yeah. Well, I still remember we went to one of our bank's branches and first of all, they were terribly well organized about going in. You know, we mask, separation, which felt really nice, organized. And we were going for safe deposit boxes because still in the United States, you need a safe deposit box because, I don't know, you have a gold coin from your grandfather that you don't want in your house. And they were, you know, so welcoming and polite. It just felt like, well, this is a kind of nice place to be. It's clean and water. They had gloves and masks. If you wanted to take a box of masks away, you could. So it's an interesting element of banks, right? In terms of what we do for people around the corner.
Yeah, it's that connection to the community, George, that I think cannot be underestimated and is really important for the value of the franchise. That loyalty and connection really is really valuable when we can sometimes lose sight of that as the world becomes more digital.
Yeah. Well, so our second question came from someone who's much more focused on digital, and we're going to pass this one on to David because I have no clue how to answer it now. And that's specifically about, we were talking about DLT in regard to payments and blockchain, but what about trade and what about exchange? What's our perspective on the revolution that might exist or not in that space? And David, help us out.
Yeah, no, certainly. I mean, look, trade is a very important part of the SWIFT network, in addition to foreign exchange payments and securities, both in terms of message flows related to traditional trade itself and open account trade, but also in terms of the fact that global trade actually drives about 30% of the payment traffic that comes across the SWIFT network. So it's a very, very important part. And I think if we compare back to the 2008 financial crisis, what we saw in the trade space there was a real resurgence in traditional trade. So traditional guarantees, letter of credits. We saw a real resurgence in those types of products based on the sort of the fear of open account and the desire for physical pieces of paper and the safety and security that gave you. So sort of the death of traditional trade that had been mooted for many years was kind of rebuffed by this 2008 resurgence we saw. Of course, if we fast forward to the last 12 to 18 months and what has been a very, very, very different kind of crisis, a health and humanitarian crisis, rather than a financial one, we see a very different kind of situation. And what we see there is actually a continued push on the open account environment, but also a real acceleration in dialogue around the digitization of traditional trade, something that again has been spoken about for many, many years, but when you have to deal with it being rather just an opportunity to remove some paper, to being the fact you're resolving the issue that your ship couldn't leave the port because nobody could get their hands on a document that had to be transferred from one bank physically to another or various other things, then suddenly you look at it very differently. Regulators look at it very differently, and legal jurisdictions look at it very differently. So I think the increasing conversation around API connectivity, the demutualization of documents, the regulatory stance that's changing. You know, we're working very closely with the ICC on on some things they're doing in this space around standards and sort of the modernization of some of this. I think those conversations have definitely been accelerated by the pandemic. And I think because there was some real issues in the beginning of the pandemic around supply chain, not least of all for very important things like PPE and various things, I think we will see those acceleration trends continue in the digitization of trade.
Mm. That reminds me of a question since Shane's on, I thought about it, which was that I was looking at a use case some years ago about blockchain and sheep's wool, and how, you know, you could, from the moment you shave the sheep to the moment that Canali makes the fabric, if it was all in the blockchain, it would be immutable. So I guess the question that becomes, is the payment embedded with that transaction, and therefore the 30% of payments disappears?
Yeah, and I'm glad you used that example, George, because for those that don't know, it's said that Australia's prosperity was off the sheep's back. So sheep have a very important role in Australian society and certainly in our agricultural sector. So as an exporting nation, wool is one of our key exports globally. We are doing a lot of work on supply chain provenance. And the underlying technology for that is, as you say, DLT. And there is a real demand and appetite for end users to know where their commodities have come from and what's the supply chain. You know, modern slavery is one element or one lens to that, but actually it goes far broader. It extends to organic food. It extends to you know, fair wages for workers actually doing the work, and also as a way for producers to differentiate quality. And so we see a big opportunity there. NAB is one of Australia's, or is the largest agri-banker. So that's an area that's pretty dynamic at the moment. In terms of whether the payment is embedded, I think that's not yet clear. We haven't yet married up the DLT underlying technology to the payment systems. There's quite a long way to go there. What I would say is, if you take a step back and look at DLT, it's fundamentally trying to solve a problem, and that is the problem of efficiency, or operational efficiency, transparency. So I think the intent is clear. I think the momentum in this space is almost irreversible, I would say. And it fundamentally challenges the role of a bank, I would also say. You know, the role of a bank as a trusted intermediary, cryptocurrencies and DLT ledgers, is fundamentally removing that need for a single trusted entity in the middle. So there's a lot, I think there's a lot of water to go under the bridge from a regulatory point of view. I think there are some technical challenges on the technology side, particularly around interoperability, but not just that, also speed. So transaction speed is one challenge that needs to be overcome. But I think overall, if you take a step back and take a long-term view, I think it's going to become more and more ubiquitous.
Yeah. Well, it's what you said about provenance rings a bell for me, at least, because my grandfather had vineyards, and provenance is all about, right, you knowing exactly where the grape came on what part of the hill, and that means a lot to a lot of people in agriculture. But not to suggest that maple syrup is any different, James. But do you see the same thing developing in Canada in terms of the trade flows moving toward DLT? Is there something that development of similar ilk?
Yeah, well, to be honest, it's not my main area of expertise, and I do have to chuckle because it does sort of, I flash in my head that there's probably a DLT use case for anything these days. But I do actually think this is an area of promise. And while Canada is a trading nation like Australia, our biggest trading partner is the U.S. And so some of the trade products that are used by countries and companies that are trading in a vast geographic area are less utilized by Canadian exporters, but there certainly is a growing importance and growing need to ensure that quality Canadian products, whether it be maple syrup or lobster or ice wine, do have that provenance and that seal of authenticity. And I do think that DLT technology does have a role to play there.
Yeah. So all of us in the sheep and maple syrup and wine business, we've got a future in banking.
Yes.
Authenticity. So Ashish, any other questions from the audience?
Yeah, George, is another one, and it's talking about the competition in Asia Pacific with the fintech. But the question is about the opportunities to partner with third-party payment providers. Could the panel give some advice on what we should consider when thinking about partnership with alternate payment providers?
Anybody want to take that one?
Yeah, I'm happy, George, given the reference to Asia Pacific, and there's a few points here that I think would be interesting, and I think overall, if you take the Australian market as one example, I think the last count was there's over 730 fintechs operating in the Australian market. This is a country of 24 million people. With 4 major banks, so quite a crowded space. The vast majority, sorry, not vast majority, the majority of those are related to payments or transaction banking, and quite a lot on the lending side as well. So you are seeing a proliferation of what I call client-facing innovation and many new fintechs. Many of those fintechs do not have a commercial model, in my opinion, that is sustainable, but some of them do. And I think when it comes to the question of partnership, it's really important that you have strategic clarity before you even entertain a partnership, whether you're a bank or even a fintech. And we've moved from fintechs are going to take over the banks and make banks irrelevant to, I think, a more mature position as an industry, which is actually partnership is the way forward. There are things that fintechs do that we cannot do at the same speed. And we're not best placed to do that. And so I think from our perspective, finding those opportunities to partner so that you can end up with a better customer proposition is the key. That requires strategic clarity. And I think for fintechs as well, knowing which bank to partner with, depending on which part of the market you're targeting, is a really important consideration as well. And then I would say one of the big learnings we've had in terms of partnering with fintechs is avoiding setting up a framework or a business, having a clear business sponsor so that you can shield the small, nimble company from the bureaucracy of a large bank. That's easier said than done. But most of the failures I've seen in this space come from a bank just trying to impose bureaucracy that's not appropriate for that scale of business, and or moving at a much slower pace where, fintechs, they're burning cash. They've got to scale up quickly. They have to start generating revenue, and unfortunately, the bank can't move at the same speed. So great ideas die because of that sort of mismatch in culture alignment. So culture alignment and having a clear business sponsor are critical, as is strategic clarity at the outset.
Yeah. So this kind of brings me to you, David, to ask you the question about fintechs. I mean, obviously, we've talked about this together as we prepared for this panel. But the fact is that a lot of us are dependent on SWIFT. We also, though, are talking about fintechs now. And you shared with us that there's a lot of thought process going on across SWIFT. But from a bank perspective, as well as from SWIFT, where is the decision point for build, buy, or acquire? I mean, where does that happen?
Yeah, I think there's no magic answer to that question, George. And I think to build on what Shane said, if I think about working with fintechs or working where you decide to buy something or acquire something, I think it's no surprise that my first answer to what's important is going to be resiliency. It's going to be security, and it's going to be interoperability, because I work for SWIFT, and that's our job, right? And I think whenever you decide to trust someone else with your money, whether it's your bank, whether it's who the banks use as their rails or people they want to partner with, you have to have that same comfort that going back to the old days of the safety deposit box where you keep things safe. It's the same for your money, right? So you want to make sure that fintech has the resiliency, has the security to keep things safe, but also has the interoperability that you're going to be able to actually benefit from it in a broad scale. And I think that actually plays a big role in helping decide when you do buy, build, or acquire, or partner, or alliance, because really you're looking at, I want to build it myself. It's either because I can do it better, I can do it easier, I can do it cheaper, or it's because I want to keep the IP with me, or it's because there's a security and resiliency angle that you don't want to, or in some cases your regulator won't let you allow someone else to do it. And then you have, of course, the general resiliency, angle and security angle that comes with that around making sure that the performance is where you think it's going to be. Do you have the track record with fintech around its resiliency? What are they doing for business continuity planning? Something else we've all seen through this pandemic as being incredibly critical and crucial. And actually, it's interesting when you look at some of the stats around where fintechs have survived the pandemic versus those that have not, actually, in terms of investment cycles, business and momentum. And it's actually been perhaps back to Shane's point as well, it's been perhaps a beginning of a bit of a culling of some of those numbers. And actually, the old analogy of cream rises to the top, right? Those who are continuing to perform post all this are probably the ones we really should consider have more strength to do so. But, I think acquire is always an interesting one, right? Because if you're acquiring, it's often a short-term fix if you want to fully acquire, because you're basically plugging in a hole saying, I would have done this myself, but if I buy this, it can happen a bit faster or a bit easier. So is that a long-term sustainable action? It's maybe a quick fix for something. Maybe the more long-term consideration when you look at that type of angle is more of a strategic investment in something, and maybe allowing others to strategically invest as well and balancing that versus an acquisition. But it's for Swift, we've long had a stance of build because of who we are, what we're being asked to do, and what's expected of us. I would say, even with us in our stance, it's a little bit different now. We're looking very heavily at partnerships, and somewhat open ecosystem and what that would look like that we deliver and why and how and for what, and where we do have strategic alliances as well with some of the, that whole coopetition landscape that we all exist in, where should we actually be partnering to benefit the community in different ways. So even for us, it's been a very different situation compared to a few years ago.
George, I would say the interesting dynamic that I observe in our market is almost like a tale of two cities. So on the retail customer facing end, you've got enormous proliferation of new and exciting innovations and solving problems for customers, and a real explosion in the number of players in the market. In the back end, though, you're seeing huge consolidation. So M&A activity to consolidate payment processes, to gain scale. The economics are clearly under pressure and will continue to be so. The answer to that is to increase scale and drive down your unit costs. So you've got this two-speed industry dynamic happening where, a flourishment of innovation at one end and real consolidation and efficiency seeking at the other end.
Yeah, that's a good point. And any thoughts, James, and from your perspective on the build buy acquire?
Yeah, no, I think my colleagues covered it off. Although I will add, I think one of the things that we did learn through the pandemic is that when we really put our minds to doing something, we can do it quickly, which is perhaps not something that we thought we were capable of before. So while we're definitely open to partnerships and acquiring and leveraging best-in-class solutions if we can't build them ourselves, we've learned that there are a lot of things that we can do ourselves if we actually have the will to do them.
Yeah. I mean, one of my experiences was, and Ashish was part of this, we ended up buying maybe three correspondent banking businesses about 20 years ago. But we were doing it for scale. We knew we had the capability to process more items, but we didn't have the volume. And we needed the scale to compete. And so, but I think we're less in those days, maybe you all have different thoughts about this, but we're less in those days. It's not about scale as it is about efficiency and how deft you are or how agile you are, right? I think.
Yeah, I agree. I think one of the other interesting things is, the banks have a lot of capital on their balance sheets, and we're restricted from deploying that in the traditional sense through dividends. And so it'll be interesting to see where this all gets deployed over the next 12 to 18 months. So there may be some interesting things that develop there.
Yeah.
There's probably a big theme that we haven't really touched on yet, George, and that's around simplification. So to your point on, it's not just about bulking up scale, but also simplifying your operations, simplifying the number of products you offer, potentially simplifying the distribution channels that you offer those products through, as a way to focus your investment and focus your efforts around risk management into a smaller number of future-proofed payment streams. So in Australia, that would be real-time payments. We have I think there's 8 or 9 different payment streams that banks must maintain, invest in, be compliant with. One of my ambitions for the industry that gets narrowed down to 1 or 2. And I think that journey, whilst you never really get there, simplifying the business will help us go faster. It will help us be more nimble and deft, as you said. And that's a really important strategic focus, I think, for banks globally.
Yeah. And David's going to hate me for asking him this question, but that kind of speaks also to, David, the importance of standards, right? I mean, if we can all migrate and evolve with common standards, it's very different to if we're all going to have different standards, right?
Yeah, I mean, standards is like standards is almost like a service we do for the industry. It is, like, by definition delegated by ISO to us to look after standards in certain places, and to me, it's a huge honor and advantage to do that, because it is the driver of how we all talk to each other. It's like it's the owning the rules around the language that enables us all to translate and speak to each other globally around the world, and do so consistently, but also be then the subsequent driver of doing so better and more efficiently together. And I think, that's something we do not just for our own network, obviously, but for things off network as well. So there's always that nuance as well, that it truly is a space where you can help change the industry. If you do it properly, and if you drive it, and if you don't rest on your laurels, which I think, what comes with, for example, the 20022 migration, which is something that the industry asked for, that we're facilitating, as are many others, really helps us develop the products and services we've been asking for, or consumers have been asking for, or e-commerce, or B2C, or C2B, or B2B has been asking for, by having that better quality, richer, immutable data. And keeping that standardized in a way that isn't about keeping it simple or short, it's about enabling interoperability. And as new players and new closed entrants come into the world, whether they're going to compete with Swift or not, it's almost like, that's my second worry. My first point is, let's make sure we maintain standards so that we can keep that interoperability that keeps the world turning.
Mm-hmm. Yeah, so we're just checking with Ashish if there are any more questions, Ashish.
No questions, George, at this point. No other questions.
Oh, we're stuck. I did want to ask us something about going back to the pandemic. You can see I'm just completely, I think the pandemic, as sad as it still is, has had such a tremendous impact on banks. And I remember the reporting we were doing internally about how to serve customers of different ilk across the company as each day went by, what we needed to do to do that. And I was just wondering whether, from your perspectives, do you think is there any way you can relate? Did this work from a digitization and banking financial perspective? Did this favor fintechs over banks, or was it pretty much a common opportunity for both?
I'm happy to start, George, and sort of lead off. I think it if you take a step back and looked and thought about what actually happened, well, it was the acceleration of existing digitization trends, the move to digital payments, the reduction in cash and physical methods. So any business that is a digital native business, which pretty much all fintechs are, stood to benefit from that. So I would argue they probably, their cause was advanced disproportionately more than businesses that are more in the analog world, or a mixture of digital and analog world. So I think that's for sure an outcome. What I would say though is it did, I think, at least in Australia, in the community and with government, it did provide banks with an awesome opportunity to play that trusted intermediary role, to execute government policy aims quickly and efficiently, and keep credit flowing to the economy, keep payments working, which I think did a lot of good for the industry actually. And actually, in times of stress, in times of need, the government doesn't turn to fintechs; they turn to the institutions they can trust, and banks certainly at the heart of that. So I think from a practical how do payments get made perspective, for sure, that's a good thing for fintechs, but also for banks. But the bigger issue for me was just a re-emergence or a re-establishing of the importance of that centralized, trusted institution.
Right. Yeah. Agreed.
Yeah, and I'd agree as well. I think it clearly demonstrated the value that we play within the communities that we serve. And as Shane said, the governments relied on that, as did our clients to support them through this crisis. I think there's no question that there were certainly opportunities that I'm sure certain fintechs were able to take advantage of, particularly as the types of businesses in the economy that I'll say thrive or grew throughout the pandemic, and the way they interacted with clients may be different than what we were used to before. So there were opportunities around the fintech side, but I think overall the value that banks play in the communities was certainly reinforced and on display.
Yeah, and for me, I'd supplement it also by saying that, in times of troubles, people come together, right? And I think this idea of banks versus fintechs is one that for a couple of years now, I've been sort of trying to dispel that myth. We talk about the co-opetition. We talk about the fact that fintech's biggest clients are actually often the banks, or banks are striving for the business of fintechs. And we have so many announcements of collaboration between banks and fintechs that it's a little bit of a myth at times, this sort of banks versus fintechs, or it's just one angle, maybe is another way of looking at it, of something that has many other angles. And what you do see in the pandemic is that not just banks have come together to help out specific countries or corridors or community angles, or to agree together to accelerate things or decelerate industry changes as well. It's a bit of a similar thing with the fintechs and bank conversation. We've seen an increase, if you like, in that collaborative discussion at a broader scale between fintechs and banks, which I honestly think is the beginning of a slightly new normal in that space as well.
Yeah. Well, and I'm sorry to have belabored the topic. It's part of the conversation around the pandemic and digital, but I just can't get it out of my head that I think that we're living through a pivotal time when things are happening that are so terrible at one level of humankind, and yet at the same time they are moving us in directions, some of them known and some of them unknown. And for banks, there clearly is a storyline here. I just don't quite think I have it all put together, but it's clearly a storyline here. And to everybody's point here, on one hand, we had the branches out there, we had the people in front of the clients, we helped train them, and at the same time, we had to be protecting them from ransomware, protecting them from, and it felt like it's all happening at the same time. And when your BCP becomes business as usual, it's kind of weird, right? When all of a sudden are living in a world. But I'd like to close on that thought, but if you have anything left, if there are any other thoughts, I'm happy to because I've kept you all quite a while with this panel. So if there's anything else you're thinking about.
No, nothing else from my side, George. I would just say that it's, as always, it's a pleasure to be here.
Yeah,
Well,
agreed.
Yep, and I'll echo those comments. Thank you.
I appreciate your time, and I think hopefully, Ashish, we don't have any more questions, do we? From the
No, we're good, George.
We'll let them go. We've been stressing them and we're torturing them maybe, but I really appreciate the contributions that all of you made. I thought that this was kind of shifted in this part of the panel to more focus on the pandemic, but as I said earlier, I think there's something that's happened that we're going to figure out a little bit further from now is pretty important as financial institutions and others. And I just am trying to figure out what that is and align it with my budget. Anyway, thank you very much, gentlemen.
Thank you.
Thank you.